Hi everyone, welcome back to my YouTube channel. So, we know that Chinese stocks have been in the news quite a bit in the last month or so. We know that the Chinese markets, Chinese stocks have been rallying, especially since the intervention by the Chinese government. So, I thought I'd make a quick video on what indicators to monitor to confirm whether or not Chinese economy is indeed started to recover. So, as you know, a little bit of context with the recent intervention of Chinese government, there has been a lot of interest, and finally, a lot of investors are taking note of these changes in China. A lot of them are still on the sidelines and they're waiting for more and more data to come out to show that these policy changes are effective and that situation on the ground is indeed changing. So I thought I'd make a quick video on what indicators are these investors monitoring and what is it that they're looking for, what kind of data they are checking and reviewing before making their decisions. So now I'm going to show you the key indicators that are being followed, and I'm also going to share with you the frequency of this data being generated. So if I go down here, I'm going to go all the way down to the summary here. So you can see in this chart there is about 7 indicators that I have put down here, and you can also see how frequently this data is released. So the 7 indicators are trade data, the GDP growth, the inflation or CPI data, property prices data, industrial manufacturing, also known as PPI data, consumer confidence, and capital inflows. So all except for the GDP and capital inflows, all except for these two are published every month. So I guess we it, I guess we now know what to look for if we are investing in Chinese markets, or if you're looking to jump in and add more stocks, more shares to our portfolio, or if we are just staying on the sidelines and want to see and wait for confirmation that indeed the Chinese economy is turning the course. We know in the past there have been a lot of false flags, so it is important to keep an eye on these. So before I get into a bit more details, there I just focused on two sources to get this data. The first one was the Chinese government's website, and then the second one was Reuters. The Chinese government website is pretty obvious. That's where you know the origination of this data is. And Reuters, I feel like Reuters does a very good job in monitoring Chinese data and routinely writing reports based off of that data. So I like Reuters, and it is clear to me that they have a team focused solely on Chinese markets, and that helps me as an investor quite a bit. I trust Reuters, and I'm totally okay with just following them only. I do want to mention that I'm pretty active on social media, on Twitter. So even if I miss Reuters articles, I see something on my feed anyway, either from Bloomberg or some other source. So, anyways, let's get right into it. So the very first one is the trade data overview. So this mainly focuses on imports and exports. We know that China's economy is driven based off of exports. So the export market, if it's good, it tells us that the demand for Chinese products outside of China is high. It also tells us that it it means that the Chinese manufacturers or Chinese employees, they are in high demand, or the work in China is still required. So overall, it's a positive sign if the exports are high. On the imports side, basically, if the imports are weak, it tells us that Chinese consumers, they're not buying as much, and they're still saving money, or they're buying non-discretionary items more. So we want to keep an eye on the import data as well and see if it's back to pre-COVID levels. The two links that we have are from the Chinese government as well as from Reuters. This article clearly shows you that Reuters follows the trade data quite closely, and they normally publish reports on this. The journalist that who writes articles on Chinese market from Reuters is Joe Cash. In fact, he was behind this article right here. And Joe Cash, he has a team, or maybe it's his team, or maybe it's just Reuters team. And as we go through the slides, you will see there's some other individuals also involved. So it looks like they have Reuters has a whole team out there, and they're keeping a very close eye on this. I follow Joe Cash on LinkedIn and maybe on Twitter too, so you can also follow him and his team. So some of the key insights that we got last time is the exports exceeded forecast, but imports fell short due to low domestic demand. So that's really good. Thank you, Reuters, for telling us that. Make our lives easy. The next indicator is the economic growth overview. That's the GDP. It is released quarterly. We know that Chinese government, they have their growth target of 5% for this year, and a lot of investors are saying that they will not be able to make it. However, with these recent intervention, they may be able to come close to it. Let's see. Once again, same sources, Chinese government and Reuters. Here's a different article. This is solely based on GDP. So once again, it is Joe Cash who wrote this, and some of the key insights written here. So very, very useful, Reuters. Next is the consumer prices, the inflation. Yes, that's an important key indicator we have to keep an eye on. If inflation is high, that means that there's demand for products in China domestically, and that's a good thing. We know supply is not an issue. Uh, we just want the demand to pick up, and if more Chinese consumers are buying products and if prices are going up, that's a very good thing. So same sources, and last we heard was in August 2024, and at that time they saw faster than expected rise in consumer prices. So that's a good sign. Uh, Next is property prices. They are important. We know why. A lot of Chinese consumers, big part of the Chinese, a lot of Chinese consumers, they own markets. That's where they own properties. That's a way of Chinese consumers to save their money and put it away. So right now, one of the reasons why the consumer confidence is so low is because the money of Chinese consumers is tied up, and as a result, with the housing prices falling, Chinese folks are feeling that they are poorer than they were before, and also they are not spending as much because they want to save money for the rainy day. Also, we know that Chinese economy is a big part of China's GDP, so that's also a concern. So this is an important key factor. We have to see if the recent intervention by Chinese government has made any impact on the property prices. Hopefully, they're getting stable now. So let's see. But as of recent update, they were still falling. Industrial manufacturing PPI producer price index. So that's mainly about manufacturing, how strong the manufacturing in China is. If manufacturers are producing a lot of products, it also means that Chinese people have work, and if they have work, chances are that they have some money to spend as well. So, an important indicator to keep an eye on. But maybe going forward, it may not be as important because we know China. A lot of critics are criticizing China to be, why is it so manufacturing heavy, and they want China to become more consumer focused, where the demand for China's products are more internal rather than external, s- like Japan and Korea. Japan and Korea, for those who don't know, they were kind of like after World War II, as they were growing their economy, they were also pretty much all manufacturing export based, but then they kind of shifted. They became more consumer confidence, consumer. type economy, and that changed. Yeah, that really changed the shape of their economy and their markets. Unlike for China, which is still pretty much an export-based economy. Okay, consumer confidence. This is very straightforward. The data is published monthly. We need this confidence to turn around. And again, as you can see, that all of these are kind of linked to one another. But let's keep an eye on this as well. We need confidence to go up, and we need consumer confidence to get a boost. Maybe the recent intervention had a big impact. I don't know. Let's see. Let's wait for the next month of data. And then finally, the capital inflows. This is important because this monitors the foreign direct investment into Chinese investments, Chinese companies. We want foreigners to own Chinese shares. This foreign money coming in and buying Chinese companies is very productive. It shows that Chinese companies are very competitive, and it's a great place to invest money in. So we need this sort of private markets investment. So from the last time I checked, honestly, most investors are staying on the sideline, and they're waiting for these indicators to turn around. They're waiting for confirmation that economy is recovering. So until that happens, I think a lot of them will stay on the sidelines. We know some hedge funds are already in and have been in, but when it comes to institutional investors, they're still on the sidelines. Okay, so honestly, I've gone through all the slides, and once again, this is a summary. So I guess the next step for me would be to find out what the release date for each one of these indicators is on a monthly basis or quarterly basis. And once I have that, I will also share that with everyone here. So until next time, everybody, take care and goodbye.